Hey everyone, welcome back to the Commercial Real Estate Library. I'm Damon Tamanawala. You know Garrett McGillivray, my co-host, and with us today we have Greg Gould and Don White. Thanks so much for joining us. Thanks, guys.
Thank you very much for
Normally we do the handshakes, but now we have 4 people, so it's hard to reach across. So today we're here to discuss co-living and Medici. Greg is the head of Canada and strategic partnerships for North America at Medici, and Don White is an EVP at Colliers, as well as the president of Private Pension Partners. Do you guys mind just introducing yourselves and a little bit about your backstory for context for the folks at home?
Sure. My name is Greg Gould. I joined Quarters through the private equity firm W5. W5, the founder had founded Core State Capital, which is a real estate investment management firm based in Frankfurt with $30 billion in assets under management. His initial impression, Core State was the largest developer of student housing in Europe. And he had started developing student housing when it was not an asset class. Right. And we came across co-living, and he said, gee, this feels a lot like student housing. Yeah. In a couple of ways. One, the format, and then secondly, the fact that it was an asset class that hadn't been truly discovered yet. And so my job was to look at all of the co-living operators around the globe and figure out which one or ones we would invest in. So I had a great opportunity to spend about a year and a half looking at the entire co-living sector. And we finally invested in Quarters for a bunch of different reasons. And we can talk about that later. But then I came over to help accelerate the growth. And over the last 9 months, we've brought in a lot of senior talent to expand the operations globally. And so we're, I think, at a great inflection point now where the systems are in place, the infrastructure's in place, and we've got now legs on the ground or feet on the ground in 45 cities across the globe, right, to look for opportunities in co-living.
It's very exciting. And you guys, for context, you guys have raised a bit of money recently.
Yes,
as well.
So we raised about $1.5 billion in funding. That is to help developers or landlords to develop properties to help accelerate our growth.
Right.
And that's a global raise, correct?
Yes. Yeah. It's focused on Europe and the U.S., but
yeah.
And Canada as well.
Yeah.
And Don, what about you?
Well, you know, we're the part of this equation. I got to meet Greg through our private pension partners business. So I have been an investment broker at Colliers for 25 years and continue to do that. But back in 2008, we started this little boutique asset management firm called Private Pension Partners that invests in multifamily commercial, really as a means to consolidate some broker interests that I had in buildings and really set and establish a platform for investing in real estate. Spent 13, 14, 15 years selling it to people and seeing them make money, and thought it was best to try to amalgamate a system that allowed us to do that. So how I got to meet Greg, we do have a local partner associate here. His name's George Marcus. He runs a consulting firm called Synergy Point Alpha. And as part of our mandate, growing our capital base and looking for unique ways to invest in cities like Toronto and Vancouver, George was able to connect Medici with our firm. So really it's a tangential and it's sort of a two-pronged approach. The Colliers network will leverage the system and help Greg find opportunities which he can become a tenant of, and we'll explain in a minute. While at the same time, P3's got the development and the asset management expertise to carry on owning those buildings or helping other landowners find the right structure with Medici and their entry points into Canada.
It's really exciting.
Yeah.
And you know, this is you're where I want to be, so this is really exciting. So just for a little context, not everybody knows about, you know, people have heard about co-working, especially recently.
Yes.
What have you heard?
Yeah. But can you explain a little bit about co-living and why, even for instance, why it's different than student housing? That's a really big question I have.
Yeah, so we spent a lot of time, in fact, the founder of Core State and the owner of the private equity firm W5 spent a lot of time developing student housing. in his former life. There are a lot of elements that are similar between student housing and co-living, not to mention that the demographic is similar. But the idea is to have a higher density, smaller format living groups, and then to provide a cost of living that is much more reasonable for or affordable for people living in cities. Everyone wants to live in cities now, but the difficulty is, as we know, especially in Toronto, the high cost to do so. So with co-living, the similarity with student housing is the smaller bedrooms. But where it's different, and I think this is a really, really important point, we overlay a whole level of technology for convenience and ease of use, but even more importantly is the community aspect. And this part cannot be underestimated, because this is what the technology helps make living there more convenient, but the community is what draws people in and makes them stay. Right. And there are all sorts of studies today that millennials, who are the primary target market we target, are lonely. And they move to a new city, they don't have any friends, and this is a way to immediately plug into a vibrant community where people are excited to see you. You can make friends easily, and you can continue to grow those relationships.
Right.
And Greg, at one of your buildings, tell the quick story, wasn't there in one weekend there was 2 weddings? So if you want to differentiate between student housing and these communities, that's a pretty incredible story.
Yeah, and it's not just the weddings, but another one is new business creation. There are two different businesses that were formed in one of our co-living groups in Berlin, where they're now raising money. They're going through fundraising. So this community has lots of different aspects. There's the business side, there's the social side, and then we find out that many of these people, even after they, if you will, graduate from co-living, are still hanging out in the communities where they started. And I think one thing that's important about Quarters is we're already global. We're in the US and in Europe, and we offer the ability for members to move from city to city. And as that network gets bigger, you'll see more, not just moving on a permanent basis, but temporary stays. And this is something that enriches the community even more.
Yeah.
So what do you mean by temporary stays?
Oh, I'm going to be in, let's say I have a project in Toronto for 3 months, and I live in Berlin. So I'll have the opportunity someday to be able to come here for 3 months, and then move my lease back to Berlin when it's time to go home.
Just a transfer between the same Quarters buildings. Okay.
Yeah, and this will happen as the network gets bigger and there are more rooms available. But today, we have people moving between our cities and, on a permanent basis.
Okay.
Yeah.
Has this been attractive at all to like even the more senior end of the market? Because like there's lots of seniors communities where seniors like to hang out together and do this type of thing.
The biggest problem we have in co-living right now is to stay focused, because there's so many different opportunities. Yeah. But on our list of to-dos is corporate housing, short-term housing, active adult housing, and workforce housing. So there's so many different ways that you can slice the living group and the community aspect. Yeah. Over time, we hope to expand into those as well. This is the co-living opportunity is too big to ignore if you look at all the different potential growth opportunities.
Yeah.
Yeah.
Got it.
And just speaking to that, so raising over $1 billion to really go out and aggressively expand, quickly expand. Can you talk a little bit to the ownership structure, how you guys are developing space, building out space, and how the growth is going to happen?
Yeah, so that's a great question. We are an asset light business, but we need development partners and landlords to accelerate that growth. So we will sign a 10-year master lease, and then with 2 5-year follow-on renewals. But we need somebody else to actually build or renovate the properties before we take them under a lease. And we actually work with the developers from as soon as we can, or we're able to help to optimize the layouts. And the earlier we get into two things, the earlier we get into the design process, and number one, and number two, the more willing the landlord or developer is willing to optimize for co-living, the returns can be significantly higher than if we just moved into a traditional building. But the improvements in return, which is both a function of higher density resulting in higher revenue, but also us assuming a lot of the property management costs, the improvement to the return for the landlord can be somewhere between 20 and 50%.
And this model is really changing the entire landscape of owning apartment buildings.
Yeah.
25 years ago, when I started selling them, the reality was you could rent an apartment in your sweatpants, and it didn't matter because there was very little vacancy and there was really no thought. And I think that rent controls and a lot of other things have kept the rental markets in Canada depressed because there's no incentive to invest in them. Companies like Medici and their Quarters brand, they're changing the whole dynamics of this, because think about an entity like this that's got $1 billion plus balance sheet. They're coming into a country like Canada and we want to be here and we'll sign a lease. It's almost like a strip bond where you're taking away the active management part and you're giving it to them. They make the spread between these densified rents, and we as developers, and through my role at P3, when you find buildings, it's really just about building an asset that's flexible, accommodates their densification, but at one point, if this whole co-living experiment didn't work, there is conversion potential back to it. And so the best thing about working with Greg and his team so far is if you engage with them early, you really get a sense as to the type of buildings they need, the amenity spaces they need, how things work. But they really, as Greg said, being asset light, they really put all the onus back on the development community. And so for real estate owners in Canada, introducing their brand here is a big thing, because the way you lease your apartment buildings could change. And think about it, if you found the right site in the right location, you could have your entire leasing program done with one signature. And then professional teams like Greg's come in and take over that property, and they run it. I was at their asset in Chicago. They run it impeccably. They've got top-notch community people on site. I don't remember what they were called, but community managers. Pretty incredible setup. So, how Greg will grow his brand in Canada, and we're going to try to help them, is really by 3 ways. It's going to be large block leasing of existing assets. Problem with markets like Toronto, Vancouver, and really most major markets in Canada is there aren't large blocks of vacancies to be had. The second way is through new development, and that will come in low to mid-rise sites, because these are not 400 or 500 unit buildings yet. They might be. And the other might be through some failed condominium acquisitions, where if that market gets ahead of themselves and there's blocks of space and the buildings fit the Medici program and the Quarters profile, that doesn't also appear to be looking like that's going to happen anytime soon in a city like Toronto. So we've got a lot of work to do, but we saw a couple of opportunities yesterday, and their footprint is just changing the way leasing works, because they come in, and again, the majority of your building or all of your building can be full from day one. So my point is, it's really a true partnership. Open book basis, understanding what values here are in the cities that they want to expand into, because their brand wants to be primarily initially in Canada anyways, in Toronto and Vancouver. They'll look elsewhere, but it's really finding the right landlord partnership. So I think once this gets moving, they're going to be a great tenant to have, because in all of real estate, your tenant is your customer. And if you can look after them and you can look after each other in a fair and balanced relationship, and that's the thing, one of the things with Medici I've been so impressed with, and the whole Quarters brand, is looking for that collaboration, which is very different than 10 years ago when you were leasing your apartment. You just kind of went, okay, you look good enough and you pass the credit score. This is not a one-off. This is a big machine.
Yeah.
Yeah, and I think also just the fact that we can outsource pretty much the entire solution for the landlord means it's a lot less hassle for them. So we take on the leasing. It's not a big deal here, but we handle the vacancy and occupancy issues and the pricing and all that stuff. So and we take on most of the operating expenses. So the landlord gets a guaranteed check without the hassle of having to run the building.
Just from that end, how do you guys negotiate the lease? Do you look at it as if it were to be rented as like a traditional apartment building, and then you sort of have some form of guarantee of like, okay, we'll pay you X amount of that, or?
Yeah, great question. We approach this in a way that we have to offer something to the landlord and we have to offer something to the tenant. And then we have to figure out if we can, if that business makes sense for us. So,
Yeah.
so the landlord, we pitch that we can improve their return. And especially because co-living is newer, that you have to offer something that would get the landlord to listen. So our goal is to improve the revenue by at least 10 or 12%. If it's a brand new building, it can be compared to a traditional layout, and we're able to design it optimally. The return, the improvement in revenue can be higher. And then for the tenant, we offer a price that's 20 to 25% cheaper than a traditional studio.
Right.
And we offer, what's I think also important is, I mentioned the community aspect, but we also offer a Class A building, a great new product, so that if you look at how many. Well, when I moved to New York, my dad built a wall. We took a 2-bedroom apartment. We built a wall in the living room, and the third guy, the less lucky guy, got that bedroom. This is an institutionalized way of offering that with a great product and a fun place to live.
Can you? So I think we should circle back on cap rates and the investment aspect and the expansion in a moment. Can you talk about the how the consumer feels about the experience, and like, what is it like? Are the bedrooms 400 square feet? Are they 200 square feet? How are the common areas? Why is it so differentiated?
Well, the bedrooms are sort of standard size bedrooms, so somewhere around 100 to 150 square feet. Okay. They will vary depending on the country and the city and the expectations. So bedrooms are smaller in Germany than they would be in LA, right? So no one cares about a car in Berlin. People do in LA, so we have to build in the parking spaces and things like that. So there's a lot of local market customization, but we have our specific design guidelines about what the best format is to generate the highest return, and then we alter that based on the city and the developer requirements.
Okay, but is it typically, are you typically having like a 4-bedroom, 5-bedroom? Is there any sort of I'm just trying to understand as it relates to traditional multifamily.
Yes.
How does
So that's a good question. What we found, we do have between 2 and up to 5 beds per unit, and if we look at maybe a traditional 2-bedroom, that could become a 3 or 4-bedroom, depending on how it's laid out, adding demising walls. We want to be careful that not too many people share a bathroom, so it doesn't get too messy. And then we also worry about how many people should be in an apartment. And our experience, and this is one of the things that I think is really differentiates us. We've been in business for almost 8 years in co-living, and in Europe and in the U.S. So we have a lot of experience with all of the property management stuff, but then the co-living stuff, like how many personalities could you have in an apartment and run it smoothly? So we find that no more than 5 bedrooms is optimal. Somewhere in the 3 to 5 beds per unit is good. The bigger the unit, if you had, for example, 10 bedrooms, then the group can become more insular. They don't hang out with everybody else in the community. We want to draw people out of their bedrooms and their apartments and into the community, because that's where the fun is. Because everybody watches TV together. They all watch the Game of Thrones together. Our community events, 40 to 60% of the residents will come to each one. And wow. I bring that up because I lived in New York for a long time. We had common areas in my building. No one ever used them, and I never knew my neighbors. Right. In fact, in this 250 unit building I lived in, I knew 3 people. So this is a completely different. Yeah, it's a completely different way of living. But you want people to come out of their units and have fun. You also, if you have a large unit, it's hard for that new person to come in, right? If there's 10 people or 9 people and you're the 10th one, it's a little intimidating. If you're in a group of 3, 4, 5, it's a lot more manageable.
Right.
So in terms of this self-contained unit of 3, 4, 5, it's just like the 3, 4, 5 bedrooms, a small common space, and a bathroom type of thing?
Well, yeah, so 2 or 3 bathrooms, yeah. So okay. we aim for 2 beds for every 1 bathroom, and then we customize based on location too. So in Europe, you might have more sharing. Yeah. In New York, you'd have more sharing. Here, probably less, and in California, less too.
But there are kitchens in every unit.
Yes, every unit has a
Okay.
kitchen.
Okay.
Yeah, you can do everything that you can do in a regular apartment in your apartment. You know, cook, watch TV, that sort of thing. But then you go outside for the fun.
Okay.
And when we were in, for example, in Chicago, touring the building, we ran into those. You know, there's a lot of tablet phone first sort of behavior in the world today, but we were up in the common area, the living room. So it's a beautifully decorated living room, pool table, kitchen. You know, these are these, you know, decks, outside decks. And these two young men were sitting there, and they instantly engaged with us. And when I asked them what they loved about living there and what made it different than student living, one of the young guys said, student living and student housing is where you go to study and you go to school. I live here because I want to live and I want to meet people and I want to get engaged. And these two guys, sure enough, one was from Europe, one was from Atlanta, I think, or something. And you could see they had this bond, and they'd only been living there for about a month. So that's the big difference. You know, you sleep and you know, maybe eat late in your suite, in your room, but you live in the building.
So it's the type of tenant that is differentiated.
Yeah, part of it is self-selecting because the people that get into co-living understand that they're going to be sharing something. If it's not the bathroom, they're sharing a big living space.
Right.
But you had mentioned before different types of people, and we have our average age is around 28, as you'd expect. But we have folks that are in their 40s, and they want to live there because it's still an exciting place to live instead of going back to a quiet apartment by themselves.
Right. How do you, so you guys have really, you mentioned technology and you guys are very experienced managers. Do you ever come across problems? Like I'm thinking about, you know, I've had roommates before whom I love, but, you know, I'm not even the cleanest, you know, I'm leaving dishes out. How do you deal with that kind of thing?
So our community managers are armed with tools to help, when I say tools, but negotiating skills, right? To help folks resolve problems. That's one of the factors that the community managers deal with. But I think two things point to how successful we are in that. One is the occupancy rate is 98% plus. The second is, you know, in the Chicago building, I think we had 2 or 3 people that have moved out in 18 months or had to move apartments in 18 months. So it's a pretty low you know, percentage. So they're handling this stuff pretty well. But you know, you've got what is it? You know, 70 or 80 apartments with 180 people in them, right? So you've got to make sure that you monitor their performance and their happiness, and you deal with things before they become a problem.
Yeah, because when you're renting a room there, you're not selecting your roommate when you go in. You're renting a room, and that's where this management part Greg keeps speaking to is so important, because it's that individual's requirement to try to mix and match people and make sure that if you're slightly dirty and you're slightly cleaner, you try to keep them together.
No, and actually, there's an important aspect to that as well. It's you can't do that with an app, right? It's not like are you clean or not? People are not going to say, no, I'm not clean, right?
100%
so
clean.
Our community managers help assess people to figure out who are the right fit.
Yeah.
You know, so you know who will, you know, which people will live well together.
Yeah. Okay. I imagine that's
It's like an in-house psychologist.
Yeah.
Like, all right. You guys
is
know.
very much, right? Very much.
And when you see the fabric of these communities, this person is so vitally important, but it really works. And that's really what enables this person to get that 40 to 60% participation at these events. So when people say, you know, is this easy to mimic? And it really is not. Their teams have so many years of history and experience. It's not an easy thing.
And do these guys live in the building too, or
They
community
don't,
managers?
but they live nearby.
Okay.
But they're there all the time.
Okay.
Right?
Yeah. That makes sense.
As you would expect. Yeah.
Yeah. Got it.
And I just want to make sure we touch on this. How does pricing compare to traditional multifamily in terms of a 1-bedroom, bachelor? You know, is there a price advantage to renting this space? Do you get free Wi-Fi? Like, how does it?
Yeah, there are a couple of things there. Number one, it has to be cheaper than a studio, a comparable studio, right? Because that's the next the sort of step up in living option. Then we go for convenience. So it's all-inclusive pricing. You get Netflix, Wi-Fi, industrial strength Wi-Fi, not the stuff you get in the hotel.
Yeah.
Where you see one letter at a time. You remember we had the old modems. And then it's fully furnished, and everything, when you move in, you get linens. You get all the towels and the stuff that you need. The kitchen is fully stocked out. And then with the app, you can pay your rent. You communicate with all the other tenants with that app. You see all the events. So that becomes your primary interface. But it's very convenient. It's very stable. And then the product you get is a Class A building, and it's very convenient because it's furnished. So and it's all-inclusive pricing.
Right. Who's buying the? I heard this question come up at a co-living conference that I was at. Who's buying the toilet paper? Is that you guys, or is that?
No, they okay. But that could be an add-on service in the future.
Right.
But no, they buy their own food and their own toiletries.
Okay.
Yeah.
Okay.
And isn't it, there's some of the buildings have cleaning and whatnot as well, correct?
Yes.
Yeah.
Yes, and that's another option for expanded services over time, in-unit cleaning.
Okay.
Okay.
I want to get into some of the brokerage questions. So obviously, I work on the multifamily team at Colliers, and how would we effectively work with you guys and partnering with Don? Can you strategically acquire buildings at a higher price point than others? Are there, or what is if not, what is the best form of building to convert? Like, have you kind of looked into that stuff?
Yeah.
And
So Colliers can help by identifying opportunities, properties, and then landlords and developers that understand co-living, because those are going to be the easiest conversations. Mm-hmm. But I think it's also important, Colliers can help in educating landlords, because what the message we should get out to them is this is a higher return business, that it is just as stable as what they're used to. It's a little bit more complicated to run, but we handle all that complication. Right. So they get a guaranteed check every month with no hassle. So if they get worried about, gee, what happens if co-living doesn't do well? Well, if the operator disappears, all of the leases transfer directly to the landlord. So they don't lose their source of revenue. Number two, the deconversion, if you want to look at it that way, is also the costs are de minimis, because you'd just be removing some demising walls.
right.
So we think it's actually lower risk, because we're providing a less expensive or affordable option for housing in expensive cities.
Right.
And to add to that, I mean, we all know what's happening to apartment valuations and land valuations in cities like Toronto and Vancouver. Mm-hmm. I would suggest it's very difficult to make sense of many rentals in this market with the type of cap rates we're seeing, under 3% in some circumstances. So quite frankly, the co-living and the model that companies like Greg's are bringing to our country might be the only way you can make sense of apartment living, because you have to densify the rent and you have to take away some expenses. And as an investor, if we can, whether it's an investment that private pension partners makes or another landlord, we're here to help Greg get a footprint. And whether that's with deals we have or other landlords or other development sites, the pricing of land, construction costs, labor costs, and quite frankly, again, just the pressure on yields in a city like this, because there's a big mentality of capital and that wants to be in the city. You have to push revenues and you have to bring down expenses. And that's what the co-living model does. Yeah. And so, when we looked through our funds to come to Toronto, and when you talk about the investment side, Dama, to put up your hand and say, we've got some money and would like to buy an apartment building, so what? Yeah. I mean, you're one of 1,000 people who want to do that. Yeah. We met Greg through sort of an online LinkedIn, as I said earlier, through our friend George. And the idea was, how do you come to a city and be different? Well, this is how you be different. And I think there's a bit of a stigma that these co-living buildings are so drastically different than what a normal apartment building is, and they are not. Right. When you look at putting up these demising walls, creating some more bedrooms and adding on some common areas, again, lobby bar type amenities, You're transforming these buildings. So the investment class is very similar. It's just rental housing. At the end of the day, what they will provide is, again, better revenues and lower expenses, which should drive returns, because that's the business we're all in. I mean, you invest money to make money, obviously.
Yeah.
And actually, on that return thing, I we'll probably talk about it later, but we have one case where a building has traded, and there was the landlord secured permanent funding for it, and there was no discount given because of the co-living option. This was for a property in the U.S. So it is starting, and the banks were international, so U.S. and Europe. So there are ways to get the full value of the co-living, the higher yield from co-living.
Right. I think even as recently as a few weeks ago, CMHC announced that they would be supporting co-living as an asset class now. So that's really exciting. I'm sure that will also help.
That will cause a lot of people to say, tell me more about co-living, right? Right. Yeah.
Yeah.
Well, and CMHC, by doing that affordability program, they are trying to create more units in every major city in Canada. Mm-hmm. And that program is incredibly attractive. The likes of First National and many other lenders are going to be able to go and pursue that type of debt for the co-living standard. And from an investment perspective, we don't think that anybody's going to be weary of a Quarters co-living building. Because if you think about what they're doing, is they are creating affordability for now in this millennial tranche, but they are giving people the ability to live downtown in cool cities like Toronto, and there'll be others, at an affordable price point in a community where they can make friends and build lifelong allies and business partners. Right. That model, I think the government's going to be in support of for a long time to come. So that debt will help the deals and the deal flow, because as we said earlier, we all know how expensive land and buildings are in major Canadian cities.
Yeah, yeah. And only getting pricier too. Right. And just one last point on that. Can you speak to, you mentioned the one sale and financing was there, so it really helped. What are there any experiences even overseas or wherever for the exit cap rates? Because I think a lot of the time people find this idea of co-living really exciting, but then they think, if it, for instance, student housing usually has a slightly different cap rate than traditional multifamily. And so is that something that you thought about? Do you have any data on that?
I don't have a lot of data on that right now because most of our buildings have not traded the land. Yeah, they're too attractive. But look, over time, cap rates probably will compress as people understand the value. Yeah. But there's too much opportunity right now.
Right.
And once you see a Quarters deck in terms of what their preferences are for building, you really see a building. I mean, people worry about reversionary cap rates because they're thinking about reversionary value. Mm-hmm. When you actually see the physical plant of the building that a Quarters brand wants, right, it really is a building of the future. And that's what's changing in the apartment world, is we are now going to start seeing different types of buildings and different types of leasing arrangements. So, as an example, at one of our properties in Winnipeg, we have a company that leases 40% now of one of our buildings and has recently written an offer for another 40% of one that we have under construction, and they want to sign 3-year rolling leases. And so the way that apartment leasing is changing and the concepts behind it, it is morphing at light speed.
Right.
Co-living, Quarters, people like Greg, they're going to make the business better. And if you're an old landlord, a family that's had something on the books for 30, 40, 50 years, to a certain extent, watch out, because these buildings are smart and they're being run by very capable people.
Yeah, and one other thing that is probably helpful to note here, in new developments, we're seeing, if someone's building 1,000 units in Miami or in San Francisco or wherever, they are starting to look at co-living as a risk mitigator. So you'll have, if you look at the stack, you have multifamily rental, you have condos, you might have some hotel, and then this component, because it's a more affordable market-based solution.
Right. You can. I would imagine that it also adds value to the other tenants who are not even part of the co-living arrangement. If you're in the same building as that, and 200, you have 200 beds that are co-living, and maybe 200 beds that are general apartment.
Yeah, and on that front, I think something really exciting is starting to happen, and we are at the forefront of this. We just announced a building in in Washington, D.C. on Florida Avenue, but it's a mixed co-living traditional building, and we are applying the community aspect to the entire building, and. First, that helps the co-living component because it's an exciting place to live, but it also helps for the traditional rentals, the people that are in the studios, 1s and 2 bedrooms. They get to participate in the co-living community stuff, and so this is going to translate into, we think, better rents and better retention for the traditional units as well, and we're going to replicate that in lots of other sites. I think it's a really powerful thing to take that community thing that didn't exist in multifamily for decades, right? And to create something there.
Right.
So speaking just from a lender's perspective, people look at it more like favorably, like you're not seeing too many people balk at the concept, like when you're trying to do these types of developments.
In the case where this one building did turn, and it's a large one, no, they were fully on board, and there was no discount. Now, that's not always going to be the case, right? But the fact that we have lenders...
a stabilized building would be a little different, because then it's like...
And right, this was not stabilized yet. Yeah. This is a new one. But the fact that there are lenders in both the U.S. And Europe that were willing to do this, I think says something. I think we've already turned the corner. Right. For that,
and remember, that's where that balance sheet comes from. If someone's
right.
gonna build them a building or give them a chunk of suites, or renovate an entire property for them, the covenant becomes a great big deal, and that's why the partnerships. When Greg said earlier about being asset light, really he is going to put that responsibility off on entities like ours to say, go find the real estate, go design it in a way that works for the Quarters brand, and I'll lease it. Now, when you go through that gyrations, lenders will say, show us some information on who your tenant is, but that's where that balance sheet investment from Core State is a big deal. And so from an operational side, even landlords, it's just flipping this whole apartment business upside down, because you have much less responsibility, obviously, if Greg and his team rents the whole building. But even if they take chunks of suites, 40, 50, turn that into 80, 90 rooms, you're transitioning from rooms to doors, suites to doors. That's the conversation you have to have. It's a wonderful injection of profitability to your bottom line, and that's where this is just, I think, going to have a meteoric rise in terms of success.
It's really exciting. And again, as you mentioned, at the end of the day, for those who are more timid and will become more familiar with the idea, it's not too expensive to convert them back, and then you're right.
We have 2 specific projects we're modeling right now with Greg and his team. The initial discussions with the lenders that we work with is that this concept, it will be endorsed, and CMHC's recent announcement obviously threw a lot of weight behind that.
I think you're so that brings up a good point. So this is the future. Multifamily finally is going to be changing, which is exciting. We've seen Dream has a project in Ottawa right now where they're going to incorporate co-living for part of it. And in the U.S., the idea is a little bit ahead of where we are in Canada. Can you speak to, you guys are leaders in this industry? Are you at all concerned that somebody will try and replicate this model?
I meant yes in agreeing with the question, and no, I'm not worried about replicating the model. 2 things here. First off, this market, and this comes from me spending a year and a half looking at the entire sector. One of the things I love about this sector is it is so big and there's so much opportunity. If any one of the co-living operators screw up, it's not because of something that one of the other competitors did. It's because they failed on their own. They didn't have the systems or the processes or whatever to. This is a market for everyone for the taking. So lots of folks can grow, and there are going to be lots of successful companies. I just think we're the furthest ahead. We're already the biggest, and we're going to stay the biggest and grow the fastest. But there's plenty of opportunity for everybody else. The second thing, though, is we've especially at the beginning, we're talking to developers who said, "Oh, well, I can do this." And we looked at the idea of how hard it would be to start one of these companies. It is very, very difficult, partly because you've got to get the technology right? That's a 2, 3, 4 year process. The other part is you have to experiment with one building first to figure out how it works. Right. And then, how hard is it for developers that are generally around my age and older to market to millennials? Right. So I think it's
I feel like you can. I feel the connection. I don't know. I feel
There's a bond.
well, I'm younger acting, I guess, but no, it's hard to. This is a product where you just don't throw it to the leasing guys and say, "Hey, go have fun." Right? You've got to have the community managers in there. They have to be the psychologists that you talked about. Mm-hmm. They have to know everybody. They have to run these things smoothly, and you don't know what you don't know until you come across it from a community management standpoint. And there are competitors that were developers that are getting into this, and the approach is still more cruise director-like. So they say Mondays we do wine tasting, Tuesdays we do cooking classes, Wednesdays yoga, right? Yeah. What we found, and one of the reasons why, another reason I like
fun,
right? What Quarters has done better is to create organic community events. So they figure out what the people who live there want to do, and they encourage them to set up the event. So each community is going to be different based on what they like to do. And so the millennials don't want to be told what to do. They want to be given the tools to do what they want. And learning how to it's a nuance that takes a long time to understand. And even if I tell you this now, you have to go out and create it, it's still going to take a few years to figure out how to do it. And at the same time, you're also building the facilities and you're designing the stuff, and then you have the property management, then you have the technology, right? So it's a multivariate equation that you have to solve every day.
Yeah, and even though our relationship is still young, the Medici Living Group and the Quarters brand, their level of engagement with developers is something that's truly unique. They're not coming into Canada or any market they're trying to expand into and try to be lock, stock, and barrel the whole delivery chain. And so good business is where everybody along the chain makes money. And our company in Winnipeg, we have built close to 1,000 units now. Let me tell you that building new buildings or undertaking major redevelopment is a ton of stress and a ton of work in countries like Canada because we are an expensive place to live. The isolation increases costs, so on and so forth. So my point is when you have a partner that says, look, you just deliver the building, you worry about all of that, and let us take it over, and we'll give you a lease for most of the units or all of the units. That is a value chain that makes a lot of sense. So the reason it's going to be very hard for them to be copied is just the way they've approached us from day one. And that is, Greg has always said, you're the real estate, either help me find it and we'll lease it, help me build it, bring it along, here's our standard. Their clarification and really the continuous information to help understand the brand has been incredible. And that is very difficult to copy as well.
And you hit on something that's really important. We're there as early and as often as the developer or landlord needs at the beginning, and we don't charge for that. Some of the other operators will say, there's this design fee, there's this architecture fee, and before you know it, it's $1 million. So we help do all of the design for free, but with the expectation that we have the 20-year lease. Right. So it doesn't cost the developer anything up front to work with us.
Okay. How are we doing on time? Okay. We're getting close, so I just want to be cognizant of that.
Right on. There's plenty to talk about in co-living.
Yeah,
right? That's the hard part.
Did you have? I have a few more quick questions to rattle off.
Go for it.
Okay. This one's not on the sheet, but it's just in the news all the time now. WeWork and their crazy founder and everything. Obviously, on the other side of the spectrum, Regis is doing extremely well and very profitable, right? Different story. But does that make you think of anything about co-living? Does that have... ties
no,
to you guys at all?
What it does is it highlights the difference between co-living and co-working, right? Co-living takes longer to ramp up because we can't just take any building and say, okay, we'll take it because most of the buildings, they're too deep and we need windows for the bedrooms, things like that. So we have to do either complete renovations or new development. So it takes longer to ramp up. But the beauty about co-living is that it's a stable long-term solution. We're at the lower end of the cost curve for living. And so if the economy slows, and with WeWork, they worry that people just start going back to Starbucks, or their institutional clients like HP or Microsoft pull that's discretionary spending for them.
Right.
With co-living, there might be some people that can't afford it anymore, but there are a lot more people that are going to sort of fall into this less expensive option. So we are in a wonderful position from a forecasting and from a sensitivity perspective to the economy.
Right.
And even when you look at the fundamentals of, say, Canadian real estate, although the downtown GTA office market is extremely strong, WeWork, Regis, those types of co-working places, they have a lot more opportunity to expand and grow. And so they're really expansion opportunities for commercial tenants. Co-living is really de facto affordability for people who don't have enough money but still want to live in these downtown cores. So the flow of water is completely different.
Yeah,
and, co-working, you're pushing. Co-living, just wait. If things in the recession, if the economy goes in a different direction, it's going to be a huge benefit to this platform. And we all know that rents in every major city in the world are not going down.
Right. Speaking on the affordability front, do you guys get any incentives from the cities that you do these projects in?
No,
they don't give you anything.
No, and we try to be just sort of work within the confines of obviously what's required by every city, and then we just focus on our pure business, not with the governments.
Okay.
You have anything?
I had a question. So I wanted to know, did you have to adapt your business model while expanding to North America in any way in terms of design or demographics? What changes did you see?
Nothing that would surprise you. The bedrooms are bigger. The common areas are probably have a little bit more co-working aspect to them, or there's places where you can sit and be a little bit more quiet. Maybe because we have more new development in North America, there's some more interesting or cool features like dog runs on the roof, fire pits in Chicago, or and barbecue. So some of because they're newer buildings, but that's probably because it's a new building, not location.
Is there a bit more a push for more washrooms in North America?
Yeah, there is more push. Some of that is sort of philosophical right now, but in places where you'd expect, like on the West Coast, there's an expectation for additional bathrooms. In Miami, the same thing.
Is that because people in North America eat more? Is that what that is?
No, they just want their own bathroom.
Okay.
Yeah, so
They
there's
want more privacy.
yeah, right.
Your alone time.
There's a lot of millennials moving out of very nice houses, and they're probably all used to having them.
Yeah.
And actually, when we talked at the very beginning about student housing, a lot of the student housing now have their own ensuite baths. So you don't want to come out of college and then into a shared bath.
Right. Yes.
Right. But again, in higher cost cities like New York City or Chicago, people say, okay, I'll make the trade-off because it's less expensive.
Right. Okay. Okay. Wrapping this up, you guys are expanding all across North America. Do you have any targets that you're trying to hit over the next year or so?
So right now we have almost 3,000 beds that are in the process of being leased. 2,000 of them are fully leased now. We've got another almost 7,000 in backlog between the U.S. and Europe, and a pipeline of north of 50,000 beds that we're chasing. We're looking for properties in 13 cities in North America, and 45 between the U.S. and Europe, and we plan to expand into Asia next year. So we've got
That'll be interesting.
Yeah, we've got a big to-do list.
Yeah. Okay. Okay. Then
Yeah, I think that's
the
good.
final. Okay. So we
How are we gonna do the final one? Are they both gonna
one and
answer?
one.
Okay.
1 and 1. So this is a question that is not a,
You have like glitter on your face. There you go.
Yeah.
okay. Thanks for telling me.
At the end of the interview.
When we're
Yeah,
already
I know.
done. Good. Okay. So this is a final question. It's not on the question sheet, but it's called the 3 Truths, and we haven't done it with 2 people before. But anyways, so 3 truths. So imagine years from now. It's 100 years from now. You've grown. You're surrounded by your family. You're surrounded by all the people who
Neither
love you,
Greg
and your
nor I
friends.
will be here in 100 years.
Modern medicine.
Well, I do live
I
in
don't know, you
Miami,
guys are-
so I'll have great looking skin
Yeah,
by then, right?
yeah.
It'll be a lot tighter than it is
Yeah.
now.
Yes, but for whatever reason, it's your last day, and you had this wonderful life, and everybody's around you who loves you. But for whatever reason, everything that you've ever written, every book you've ever written, every interview you've ever done has been erased, and you only have one short note to write to the people who love you and who care about you, to how to live your life or how to lead your life. So what would you put on that note?
Well, I'll just talk about the one relevant to this, because my family's the most important thing to me. But what's really exciting about this is creating something new, creating a new way for people to live, or create something new that people want and are going to enjoy and is going to be useful. And this is co-living is that kind of product. Or opportunity, and so I'm actually happy to be part of something where we're creating a new way to live.
Cool. And
Yeah, I would just say, as I've always kind of run my life, is be open to new relationships and trust. All good things in life, they tend to have a lot more risk. Sometimes you got to put your hand up in the air. And how I met Greg was, through George it was really an interesting path. But here we are. And so, here's a guy from Winnipeg who's trying to make his mark on the Canadian real estate scene, and be open and true and humble to yourself. Work hard, but trust. And I really do trust that this co-living concept, like many others in commercial and multifamily real estate, it is really changing the way we all live and work. I think North America is probably under demolished, not overbuilt. And some of these concepts that are really tech driven, the truth would be, to my family, I had a lot of fun. I tried some new things, but I trusted good people. And I think this is a good company. And Greg's got a great vision. They collaborate. And if we work hard together, hopefully in the next few years, we've got thousands of beds to talk about in Canada.
Yeah. And if on your last day you were talking about co-living, it must have really went well. So
No, but I don't want to underestimate the in my previous world, I was a banker at Goldman Sachs.
Right.
And it was an incredible opportunity. Here, we're creating something brand new and exciting. And that's what's exciting about that.
Okay. I think that's a good place to leave it. Thank you so much for joining us. I'm really excited to work with you guys in the future. We're really excited to collaborate. And
So can we sign you up
best
for
of luck.
10,000 beds right now?
Sure.
Deal.
He doesn't know where those are coming from, though.
Hey, thank you.
Thanks, Dave.
I'll finance it.
Yeah.